This is Week 28, Episode 10 of the GoldMining Swissie USDCHF Recovery Series. The objective remains the same, systematically recovering a real 2,500 cents starting balance toward an ultimate target of 10,000 cents. The data shows the scale of the challenge. The account carries a negative growth rate of 17.69%, following a maximum drawdown of 65.44%. While in active recovery, the monthly table illustrates the impact of 2026 losses. We are currently managing a balance of 1,967.75 cents. Operating from this fragile position means the account has very little room for error. Every trade executed carries immense mathematical weight. Within this long-term recovery, Week 28 produced an anomaly. Under typical circumstances, a damaged account requires consistent trading activity and aggressive percentage gains to begin making up lost ground. However, the results for Week 28 show exactly 0 executed trades, 0% gain, and a total lack of market activity. Given the urgent need for growth, it raises the question of why the system would choose to come into a complete standstill. In a systematic framework, an empty week like this is rarely an accident. To understand if the system is failing or functioning, we have to look at the logic behind the silence. The MT5 performance report for the past week confirms the lack of execution. The central indicator sits at 0, showing no trades were attempted during the period. The ledger remains clear across the board. We recorded 0 gross profit, 0 swaps, and 0 commissions. There is a common assumption that a trading algorithm is only working when it is actively holding positions in the market. In reality, the primary function of a systematic strategy is to act as a filter, protecting capital by staying out of the market until specific conditions are met. The internal data shows the system chose not to participate. To find the justification for that choice, we have to look at the market environment the algorithm was actually seeing. This M15 chart of the USD-CHF pair shows a market characterized by choppy, indecisive movements throughout the week. This indecision was driven by several external factors, starting with shifting market expectations regarding Federal Reserve policy. Compounding this were fluctuating Treasury yields, which created instability in the direction of the US dollar. On the other side of the pair, persistent safe haven demand continued to provide robust support for the Swiss Franc. The combination of an unpredictable US dollar and a highly demanded Swiss franc resulted in a directionless, turbulent trading environment. The algorithm interprets these conflicting macroeconomic pressures mathematically, looking for a clear trend or momentum alignment. This week, the market failed to produce the high probability alignment required by the system's entry parameters. When risk sentiment is this unclear, the system's most effective decision is to deny the market any exposure to our capital. Managing an account through an extended recovery requires navigating long periods where very little happens. Most trading content focuses on the extremes, either massive percentage gains or catastrophic losses. This screen shows the reality of a systematic approach. There are no trades to highlight and no history data to report for the week. Documenting these quiet, uneventful weeks is a necessary part of account management. These periods of inaction are what allow the account to survive long enough to find the next opportunity. Survival is the prerequisite for profit. In this context, non-participation is a deliberate survival skill. Systematic trading does not require constant participation to be effective. Patience is an active defensive posture. When market conditions are unfavorable, capital preservation becomes a measurable form of performance. Because the system remained disciplined, the account balance remains fully secured at $1,967.75. The road to the 10,000 cent target is long, and it continues next week with our capital intact. Recovery is not built on constant activity, but on the consistency to follow a rigorous risk management plan, even when it means doing nothing at all.